What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, I'm not going to hold you. I'm super excited what I have planned for y'all today. We're going to be going over our weekly market briefing for our bots performance for week 14, and this is going to be the dates covering March 30th through April 3rd, 2026. So if you haven't already, go ahead and smash that like and subscribe button. So one of the things I want to get into right away is that this NFP number just dropped, right? Not NFT, right? I wish it was NFT, but NFP, right? And NFP stands for the non-farmers payroll, right? So let's go ahead and jump straight into it. So I'm looking at TradingView. TradingView just dropped an article just to go over it, and I like to be able to read different articles and get different perspectives on what the underlying traders and markets think, right? So US NFP, and remember, non-farmers payroll data growth exploded with 178,000 March hires, far above expectations. So the U.S. market added 178,000 jobs in March, and the U.S. labor market reported on Friday, blowing Wall Street expectation of 59,000, right? Almost 3x what Wall Street expected. So that's one thing that we have to keep in mind for what's going to happen on Monday. So the market wasn't able to react to this today because today is April 3rd, 2026, and the markets are closed for Good Friday. Shout out to you. And what's happening right now, the market is going to sit on this for the entire weekend, and we're going to have an explosive open on Monday, right? So that's going to be something to look out for. And this is reversing February's net loss of 133,000, excuse me. A convincing beat of non-farmers payroll is a kind of number that would normally send equity surging, rate bets collapsing. With the U.S. market closed for Good Friday, traders will have to sit until Sunday night when futures open. Now, I don't trade futures, but for those that do, that'll be an interesting time to be able to see how that goes. So maybe we'll go live on that day. But never mind. Let's keep going. So healthcare and social assistance drove the train, adding approximately 90,000 jobs in March, continuing its role as the labor market's most reliable pillar. Unemployment rate fell to 4.3%, a positive number that comes in with important context. And the 6-month average for the monthly job creation sits just at 15,000, a dynamic deceleration for 78,000 per month a year earlier. Now, a strong job market complicates the Fed's math. Reason being so is because 178,000 jobs printed, well above the expectations, gives the Federal Reserve every reason to hold rates steady. Right now, if they cut rates, it's a good thing for the market because it makes everything cheaper for us to be able to consume and buy. Right, it makes R&D a little bit better. Right, it's because when individuals are borrowing money from the banks, they're not charged that much for it. But if there's a little bit of a rate hike, it makes everything a little bit more expensive. Right, so and it removes any near pressure to cut. Rate cut expectations already compressed and can now compress further in the days ahead. One blockbuster month doesn't resolve whether the underlying trend is stabilizing or whether March was a statistical bounce from a deteriorating trajectory. Friday's print in a 5-week will provide more food for thought. In a labor market being held up primarily by one defensive sector while other industries remain cautious, it is not the same as broad-based hiring strength, even when the headline number looks so impressive. So let's go back to our report. So week over week, what we're seeing for the past 3 weeks is that all 4 indices are up, right, throughout the past 3 weeks, because week 11, week 12, and week 13, we had massive market sell-off. But one of the things that we didn't see improve was VIX, and VIX is the volatility index. Now, the S&P 500 is the top 500 companies within the New York Stock Exchange. QQQ is the top 100 companies within the NASDAQ. DIA, or the Dow, is the top 30 companies, or the top blue chip companies, top 30 blue chip companies, right? And then we have IWM. IWM is the top 2,000 small cap companies. So as you can see, for this entire week, we have all of them started off on red. Even IWM had a couple of blimps, but we normally don't trade these two because, I mean, these are more so just to be able to get a little bit technical indicators so we can see how the overall market is going. So we can see all three are up over 2% for the week, but the only thing that we didn't see improve to go under 20 was VIX, and that this week we saw VIX climb to 3164, the highest levels we've seen in months, right? So consumer confidence is cratered, but inflation data is coming in hot, and the Fed is confused to try to figure out if it's going to cut rates or not. So as you can see here by this heat map, all four indices were down. Then we had Tuesday, a bit of a recovery. Then we had the recovery continuing, but a little bit more of a sell-off for DIA and IWM. And then Thursday, we had everybody close in the green. Now, day over day, you can see that Monday was a bit of a struggle day, right? Then we had Tuesday coming in a little bit better. Then the pivot, and then we had the dead cat bounce on Thursday. Now, what moved the market was going to be the NFP, which is the non-farmers payroll data. We already talked about that. The expectation was that it was coming in at 60, but it actually came in at 178. So the surprise is about 196%, right? So the markets is going to go dummy. I don't know if that's going to be a good or bad thing. We have to wait until Monday in order to find out. Now, another thing that came in this week was the retail sales ex gas and auto month over month. Expectation was 0.2. The actual was 0.4, 100% surprise. So let's go ahead and go over our bots performance for the week. And again, this week being March 30th, through April 3rd. So one of the crazy things about this week, we had a month in and a month open, right? So for the week, we had 4 trading days, and of those 4 trading days, we had 54% win rate. We were down $285. Now, a difficult week, bro. Even though we were down, there were some bots that had a couple of great days, right? So looking at Monday, average VIX was 30. And remember, VIX is the volatility index. It allows us to be able to gauge how volatile the market expects us to be. Are we going to expect something big? Are we expecting something good or bad to happen, right? The range for the day was between 29 and 31, and 31 is the highest that we've seen it in months, and it did cross that 90% threshold. Volume for the day was kind of low, and then PC ratio was high, and IWM and DIA was not helping out at all. So the previous week, 46. And then week over week is 61, but we do have a couple of bots that are performing quite well, and those bots being Starbaby, and Starbaby is our morning and evening star bot. This bot straight trades candlestick patterns, right? So all price movement. So on the day where everybody else was struggling, this bot went betting 1,000, right? And this is anything from call. So the bot thought the market was going to go up, and we had a couple of put plays in there as well. We also had VWopper betting 1,000, and this bot trades QQQ. This is our momentum, and momentum bot. It uses an EMA crossover, VWAP, and RSI. ADXBaby always leading the way, coming in at 60%. 5 trades, a little bit of over trading, right? If we would have stopped here, the bot would have been at 1,000, but a little bit of over trading that kind of took away some of the profits. So if we want to look at later in the week, let me show you a couple of bots that didn't perform too well, right? We have Bri got it, 1 trade, but that 1 trade was $43. Reason being so is because the bot opened a position and couldn't close it. So that was one of the fixes that what I had to do to the bot in order to make it a little bit better. Then we have ScreenyBaby. The bot did have 1 trade, but a few of the times the market did go against us. So let's look at how the week closed. We have ADXBaby, right? That's coming in at 75%. ScreenyBaby. So that's kind of funny, right? You have Breaky that's at the bottom here, but closing out the week, where's Breaky, right? So that shows you that it just takes 1 trade in order to get you up, right? So that's kind of interesting. What was the trade the bot took? Bot took a call or put. Now it took a call, and it was like, you know what? I know what I'm doing. So for Thursday, we have the average VIX was 25. The range was from 24 to 27. And we have ADXBaby leading the way, 24 made. Now, there was 1 trade that wiped out some of the profits, right? This trade right here, bot thought the market was going against us. And one thing I have to figure out is how to make this bot enter a little bit earlier, because I've been noticing it's been entering a bit too late, right? So that's why it's not wasn't batting 1,000 there, because that trade, even though it did work out for us, we were positive in it. And as you can see, Starbaby is still here. There was one trade here that just wiped out all of the profits. Now, I'm not going to say over trading, because this bot is allotted 3 trades per day. It was just this one trade that just didn't work out for us. So let's look at the trend for the week. What we're seeing is that VIX and SPY, the S&P 500, was up 2.5%, and then QQQ was up 3%. Now that makes sense. QQQ is more tech heavy, right? So you're going to see a lot more volatile movement. So that makes sense. When SPY is up, QQQ is going to be up a little bit higher. And then VIX did close at 24, but we did see a high of 31. Now, ADXBaby is a bot that is a steady performer, right? This bot sitting at 79%. And it's up $45, right? So this is one of those bots that I'm thinking I'm going to have run live and actually start with our $100 challenge, which we're going to be making a video on here soon. More on that in a little bit. Then we have Easy Reader bot. This bot did improve $43 and was down 84 the week prior, so it was a 21-point improvement. ScreenyBaby bot just had a difficult week, right? Bot went from being one of our top performers, and just this week just didn't work out for the bot all too much. Midas bot, this is our only bot that trades in the afternoon. I think it's warranted for me just to create a video so I can see how this bot trades. And then Early Worm, this bot is trying to come back. It was down $35 last week, and now currently it's up 35. So like it's now even. Right, talked about Bro, I Got It. We talked about VWopper, and there's a couple of bots that kind of had to stop because they weren't performing too well. Range Baby, Penny, FB, Breaky Baby, right? Just these bots weren't performing. A second chance, even though AV Baby is here, right? One of the things I have to note here or denote here is that this bot had a code error that I had to fix that now is resulting in it being a bit better. So what I would say here is that overall, we're seeing a lot more better performance with our bots, and them being able to not only just trade automated, right, but being able to understand the market a little bit better, right, and improving week over week. So if you want more videos like this, and if you did like this content, go ahead and throw me a comment on any feedback that what you're wanting to see, right? And don't forget to hit that like and subscribe button. It is your boy Creative. I'll be back at it again with another episode.